folks. We had the Dow close down 10, Nasdaq was up 9, S&Ps are down 3, and as we do each and every Wednesday at 20 past the second hour, we have our man Darrell Martin, and we have we're going to be talking about the Nadex exchange, folks, the North American Derivatives Exchange. Come over to our website at TFNN, and you're going to see the Nadex banner right there. You can press that banner. Go over to Nadex. You can test drive this platform right here, right now. They'll put $25,000 of funny money in your account. And our man Darrell is going to walk us through a couple trades here. Darrell, what's going on?
Hey, man. How's it going?
It's going great, man. Good to have you back.
Yeah, thanks for having me back.
Hey, last week you gave us a great education on some of these spreads. Yesterday, I mean, was just, you have to love these highly volatile days. I mean, yesterday was just a mind blower, wasn't it?
Oh, I know. Yeah, I mean, you had the market start out around like 1390 and hop all the way up to 1412 and basically get back 12 points and, what is the last like few hours there.
Yeah. So talk to us a little, if you can, just first off, what you like so much about the Nadex products.
Well, basically with the Nadex products, the thing I like so much about them is they define your risk.
Right.
And, you can always define your risk with a stop loss. But the cool thing about the Nadex products is your stop loss doesn't mean you're stopped out. So if you have a floor where basically the floor of the spread, if you buy the spread and it goes below that floor,
yes,
doesn't matter how far it goes against you, your risk is defined, but you still have time for it to come back and be right.
Right. Right. Which, and in that case, it's kind of interesting is that whether it was yesterday or even today, it doesn't, in both cases, if you actually, because they have daily ones and they have weekly ones. In both cases, on a weekly one, we had price range, but you wouldn't have got stopped out, which is pretty amazing.
Exactly. You got your dailies and your weeklies on the binaries. You got your dailies constantly on the spreads.
Right. Okay. So if you can walk us through, what I'd love you to do, and last week was a great example, but if you can walk us through, whether it's an S&P trade, with the spread, whether it's a commodity trade, a Forex trade, whatever you'd like to walk us through.
All right. Basically, an S&P trade, here's an example, is, last night, European, as we know, of course, the market started just falling back, gave up 10 points overnight.
Yes.
And Europe opened up, and it just went ahead and decided to follow suit right around 2 a.m. Central Time.
Yes.
So depending upon, what indicators and everything you use, my indicators said go short, and right around 2 o'clock.
Okay.
2:20. And so when I went in to go short, I had to find basically, okay, how can I limit my risk? Because if I go short, this thing did just fly up in a matter of minutes yesterday.
Right.
It gained 10 points in less than a few minutes after the announcement in the morning. And so, obviously you get really nervous when things like that are happening. When you're getting those kind of big point moves. And so I went in to find, what's the best thing I think I can do to go ahead and, ride this trend on the way back down.
Okay.
I pretty much figured we'd go back down to yesterday's lows. Okay?
Yes.
So with the move down, I didn't see the market just crashing down, but I easily saw it giving back everything it made yesterday.
Okay.
From where it opened up.
Yes.
And so right around 2 o'clock, what you could have done is you could have went in and went short the 1400 to 1360 spread. Okay?
1400 to 1360 spread. If you're watching Tiger TV, what I did, folks, is that I have the E-mini up so that as Darrell's talking, you can see, right where it was at 0200 in the morning. Go ahead, man.
So if you go in and let's say you short the 1400, 1360 spread.
Yes.
And what that is, that's 400 points, okay, or, $400.
Yeah.
Right? Of value in the spread. And you could have shorted it right around 1398. So what that would have done is your risk would be where you shorted it to where the market's at. So the market's at 1400. That's your ceiling of your box spread.
Okay.
That's what caps your risk.
Right.
So it's always that ceiling and floor that caps your risk. Your ceiling's at 1400 on the spread. You can make money all the way down to 1360.
Wow.
Your ceiling being at 1400, and you go in and you say short at 1398.
Now, when you sell, when it's at 1398 and you're selling that, is that? So you're saying you get only 2 points. So does that means you out of each contract $100? So that means you're risking $20? Would that be correct?
Yes, that's 100% right. Exactly. Yeah, you'd be risking $20 on one contract.
Okay.
And then what I like to do is I like to equalize them. So it's the same as trading, say, a futures contract.
Okay.
Okay? So, obviously knowing that a futures contract is, $50 a point.
Okay.
You look at the E-minis. And on the spreads, they would be $10 a point because every single tick, they tick in dimes. Okay?
Yes.
So like the full-size contracts on the floor, they tick in dimes.
Okay.
Every point, and this is a very nice thing to remember.
This is cool, man. I love how you set this up. Okay, okay, go ahead.
Every point on every spread. I don't care if it's Forex. I don't care if it's the Kospi. All right.
Yep.
I don't care what you're trading. Every point on every single bull spread is worth $1. Every tick is $1.
Okay, perfect. I got it.
So when you got 1 point move, then basically what you're looking at there is, like you said, like a $10 risk.
Exactly.
Okay? And with that, if you have a $10 risk on a spread and you have a $50 risk on a future, simple math. How many spreads do you need to equal a future?
5, so, okay.
5. Exactly. So when I go short 5 spreads, so it's like I'm shorting the futures contract.
Yes.
Now I got to put up my risk. Well, my risk, as we already talked about per spread, was 2 points. Okay, $2.
Yes.
So we're $20 actual of risk. Okay, $20 US in risk
per spread. So it's $100 we're risking, right?
Exactly. Okay. By the way, it's also $100 in margin.
Yep.
So, like we talked about on one of our other shows, literally that'd be a $17,000 margin on ETFs. That'd be $500 to $5,000 in margin on the futures.
Amazing.
And that's without defined risk.
Right.
This is with defined. So, $100 of risk, defined. It doesn't matter if it goes up to $1,400, $1,405, $50. It doesn't matter how. If it goes back up to $1,412, I'm only losing $100. And by the way, I'm not down. Okay?
Exactly.
So it literally could go up and come back down. I can still win. So it drops down, and basically you have the spreads dropping down right, about 1390, 1392 today.
Yes.
If I, on my indicators, I would have got stopped out right about 1393.
Okay.
Okay. So you're looking at, selling at 1398, basically getting stopped out right around 1393. So 5 points of profit. So that would literally be, you do 5 and you're getting $50 a point, $250.
That's nice. No, so you risk 100 and you made 500.
250. Yeah.
250.
Yeah, because the E-minis.
Oh yes, okay, E-mini. Okay, 100. Okay, yeah. Cool. And of course the key in that is that that's where it went to. But the whole key, what you're saying, is that you talk about a defined risk. It's pretty amazing, isn't it?
Yeah, I mean, that's one. Risk $100, made 250% on your risk and your investment, because your investment was your risk.
Right. Right.
And whereas you would have had to put up a lot more money, which means you would have made a lower ROI on investment. Plus, you didn't have defined risk in any other type of trade, like the futures or the the ETFs.
Yes. I'm telling you, that's a beautiful thing, man. There's no two ways about it. And now, listen, folks, for all you folks, even in down in the Dallas area, the Traders Expo. You're going to be at the Traders Expo, right? I'm going to be at the Traders Expo. We're talking.
We're going to be there good.
Yeah, we're gonna be down there. You got all you tigers and tigers. We want you to come out and growl and prowl with us because Darrell is going to be basically teaching you those strategies on a continual basis. Darrell, you have a great one, a safe one. Can't wait to get you back, man.
All right, be talking to you next week.
Okay, great. Have a great one. Have a safe one. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow finish down 10, Nasdaq up 9, S&P's off 3. Don't forget, go over to TFNN, hit that Nadex banner, and get up, test drive that platform right here, right now, folks.